Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the worlds of Bitcoin and Ethereum, taking a look at what's been going on most recently and what we would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. You also find links to our Patreon services, our other promotions such as 𝗕𝗘𝗪, and of course the new Cheeky Community podcast down in the description below. Why not check those out if any of those are of interest to you? Okay guys, let's get right on into this one and start taking a look at what's been going on with the background data for Bitcoin and Ethereum. We're going to start things off by taking a look at some Glassnode data. Okay, so guys, what we've got here is basically a Power BI report, which basically goes to Glassnode Studio, takes the API data, throws it into my own report so we can make a little bit more sense of it. Up in the top right hand corner here, we have the inflows and the outflows. These are for this year. That's from January the 1st, 2022 to current. So we've got 7.56 million Bitcoin going onto exchanges, with 7.85 million coming off of exchanges. Over here on the left hand side, we see the balance of Bitcoin on exchanges, and you can see how over the last 365 days this is diminishing down. So we have a macro accumulation happening during this bear market. We also have over this side the net difference change, or the basically the Bitcoin on exchanges, what the net difference is between the inflows and the outflows. You take your inflows on any given day and you take your outflows on any given day, and then you roll up 30 days as an average of that difference and you get a single bar. So each bar here is a 30-day average. It doesn't really tell us too much other than it gives us a nice graphic as to whether or not accumulation is occurring, whether or not there's big kind of outflows, or whether or not we've got big inflows in the way for exchanges. Now over here we can kind of see that recently we've been going sideways a little bit, pretty flat, nothing too much going on, with a little bit of accumulation right here in the last kind of 30-day average bar. So it gives us a bit of an indication that maybe finally the inflows are starting to waver a little bit, and we'll talk more about that in a second. Down at the bottom we have the hodl waves. The hodl waves are basically telling us whether or not diamond hands continue and remain diamond hands. So what we have is 13.7% as 10 years or more. This could arguably be lost Bitcoin that, you know, we have lost the keys to the wallets and all that kind of stuff. So that's a large chunk of the circulating supply that might not actually be accessible. Over here we have the 7 to 10 years. There's no change there. The 5 to 7s, there is a little bit of an increase, meaning there's a decrease on the 3 to 5 year holders as they move up a bracket. We have the 2 to 3 years. Again, there's a little bit of an increase there, so you expect a little bit of a decrease on the 1 to 2 years. Other than that, there isn't actually anything to really note about the hodl waves. It's actually pretty good. There's no major movements or anything like that, so I'm not too concerned. Let's move on over into the inflows and the outflows. And this is one of my favorite graphs because it basically, unlike Glassnode Studio, where you have to kind of have a look at the inflows and the outflows separately, on this report we can look at them both at the same time, which is equally as important, because this way we can see whether or not the inflows are important or the outflows are more important. So for example, we can see there was a nice spike of up here on the on the outflows rather than the inflows. So in the red line is all of our inflows and the green line is our outflows. So yesterday we can see here that there was 40,000 coming off of the exchanges, with 36,000 Bitcoin coming onto exchanges. The main thing to note that for a little while now we've seen pretty much the demand get met by supply, and we'll talk more about that in a second. And you know, what we finally are starting to see from here, you can kind of start to see that there's a little bit more in the way of outflows than inflows. Okay, so as an average we're starting to see a little bit more in the way of outflows than we are inflows. But for the most part, when we take a look at this graph, we can see that pretty much the demand, which is our outflows, is being met by the supply, which is our inflows. So basically what we're saying is that there's a transfer happening between participants, okay? Which brings me nicely on to the next area, which of course are the wallets, right? We've got the 1000 Bitcoin or more, the 100 Bitcoin or more, or the 10 Bitcoin or more wallets. Dolphins, sharks, and whales, all sea creatures. And basically what we're talking about here is that the whales have been aggressively de-risking. They've been aggressively coming out of their positions, even since the Bitcoin hit its low, its kind of local bottom, if you will, of 17,622. You can see the black line just up here that they were aggressively selling off into the recent pump. Okay, so you can see they've been coming down ever since we hit that low point. In fact, they've actually been decreasing since we were at $48,000. There is no difference here in comparison to what has happened previously. Now, just to kind of make sure that everyone is aware, this is not the last 24 hours. This is the last 90 days. This is the last 90 days, and this is the last 90 days. So we get a good idea as to what is going on. But if I wanted to, I can just come into this particular graph. I can go over to my settings here, and I can just go ahead and change this to be in the last 6 months. So you get a real good macro idea as to what is actually going on with these whales. There we go. Okay, so basically from late January, early February, they shot right up here. Okay, and they've been aggressively selling ever since. Okay, and even when we hit $17,622, they still continue to aggressively sell. And so this is not a case of they are buying now the bottom is in. They are still selling, and they are still selling because they don't believe, in my opinion, that the bottom is in. And again, you know, we can see what's going on with the sharks. They've been aggressively following the price action. So you can argue that these guys don't really care whether the price goes up or price goes down. They follow it, and they will just continue to do whatever the price does. They'll buy it if the price goes up, and they'll sell it if the price goes down, and they're just going to follow suit. On the dolphin side, however, these guys are the more emotional kind of players. These guys are the ones who are, unfortunately, retail investors. Maybe these ones are high net worth individuals. And basically what they're doing is they're basically just buying the dip. We saw that from here. They see that the dip came in. Now we'll buy that dip. Oh, the bottom is in, so we'll continue to buy that. And they've been aggressively buying up this recent pump to the upside. Now, this obviously is still a 90-day period. It's important to know that these are a 90-day period. Now, when it comes to whales, we know how these guys operate. These guys need to sell into liquidity, and they need to buy into liquidity. So basically what I'm saying here is that in order for these guys to sell, there needs to be a buyer. There's always a seller, and there's always a buyer. So for our whales to come out of their positions, they need someone to be coming into their positions. So let's go ahead and take a look at what the Bitcoin whales look like during a bull run and a bear market. So here we have the 2017 bull market and the 2018 bear market. Okay, so we can see the orange line here, aptly chosen for the price of Bitcoin, as going up in 2017. Yet over here, the black line is our whale wallets. We can see that these guys are aggressively de-risking before the top is in. Now, I know what you might be thinking. That was very foolish of them. They sold early. They got out far too early. They didn't know what they were doing. Well, that's not necessarily true. What they do know is actually they need to be able to have someone to sell to. They can't try to sell the top if no one is going to be buying it from them. So essentially with this kind of level of volume, they need people to buy it from them. So the price has to go up. So they have to sell into the pump. So they started their aggressive selling strategy back in July, I believe. Early August of 2017. Okay, so they start selling as the price pushes up. And guess what? The second that we're past the top here, they stop selling, and instead they start to accumulate a little bit here. They go sideways, and then they start to aggressively accumulate. Okay, they aggressively accumulate when we are about 3 or so months to the bottom. So for example, we can see over here, the bottom happened in December of 2018. Okay, but they were accumulating way before. Okay, let me actually just go sort this out. I just need to format this, and I just need to send this backwards. So hopefully that's now gonna make it worse. There we go, perfect. Okay, so these guys were basically aggressively buying from early September. Okay, so as that price pulls back, these guys now start to accumulate. They start to accumulate not at the bottom, but before the bottom, because they need people to sell to them. So not only on this side where you're in a bull market, They want to sell their positions to people who are buying. Now they want people to sell their positions as they are buying. Okay, and as of course you hit the bottom, they stop accumulating, and then everything starts to run from there. So one thing that we have to understand, that these guys, or what they are doing right now, is not uncommon. They need liquidity to come out of their positions, and they are doing this because they believe that the price is going down. We have to bear in mind that they are still aggressively selling right now, and this is lower than the price that they actually purchased for it. So the question that we have to ask ourselves, and it's a question that we all should really answer for ourselves, is do we think that the billionaires and the multi-millionaires are willing to sell at a loss because... Well, I don't really know why they would want to do that. So if the bottom is in, then they would just be holding. They wouldn't be selling. And if the bottom is not in, and they believe new lower lows are in, then they might want to sell and accumulate more down at the bottom to make more money at a later stage. And so whatever the reason is for them to sell, it's definitely not giving us a lot of encouragement, in my opinion. And I know there's a lot of loose reasons behind why some of these players are selling. So whether that's because they're being sued by Twitter and I might need that money, I should probably lock in those gains now, right? Or I might need the money because there's a crisis in China, so I'm going to lock in the money now. These are all really loose kind of ideas, and of course only really work when you are on the kind of expectation that maybe the market isn't going to be favorable by the time you actually need those funds. So for example, let's take Elon Musk and the $6.8 billion worth of Twitter stock that he sold, right? He sold that now. He doesn't need the money now. He thought, I'll sell it now, I'll lock in the gains, and if I need the money for the Twitter lawsuit later, it's there. However, if you're at the bottom was in and we're just moving up and everything was going to the moon, then actually he would have sold prematurely. He should have waited, right? He should have stayed in the market. It could have gone up in value because we're going to the moon. And by the time he actually needed the actual money, that 6.8 billion might have been 7.8 billion. We don't know, right? But locking it in without actually truly needing to have access to the funds only tells me that, in fact, that he's actually expecting the market to go down, not up. Okay, so it's important that we understand these things and understand that actually a lot of it's quite logical. And, sometimes you can't believe what people say, and you actually have to go and do your own research and dive into these things in a little bit more a little bit more. And I think it's important that everyone does their own research, comes to their own conclusions, and all of that really good stuff. So on this note, let's go ahead now and jump on down into the world of Bitcoin in terms of the price action and the data that's available in the charts. So here we have Bitcoin paired up with USDT on the hourly chart, and Binance is the data source. Now, we are tracking this corrective structure to the upside. We've been doing this for a while, and this is no trend. Okay, so basically three-wave structures are just short-term corrective structures. They can go up, they can go down, and the main thing here to note is that they are short-term. Okay, so we have a three-wave structure taking us up higher. We have got our potential of $26,500, but as time progresses, that's harder and harder to see. Okay. Inside these, we also have a lot of smaller three-wave structures inside our three-wave structure and all that kind of stuff, okay? So within our C-wave here, it's looking like we might have a 1, 2, and 3 structure here as well. So A, B, and C, for example, or W, X, Y, however we want to articulate that. And that could take us to that 26.5K. But as time progresses, as I said, it's getting harder and harder to see. We are right up in this resistance area, okay? This is basically an area that we keep finding ourselves battling. This is basically the 618, the 702, and the 786 on the fib levels from this low point down here at 20,706.50. Now, we have been witnessing this recent kind of pullback, which is kind of expected to a degree, where we are looking at this as another kind of three-wave structured drop. Now, it's possible that this has actually finished just inside here as we've got this volatile moment, but taking a look at the momentum on the stochastic RSI, I'm actually thinking that we are likely to see this come all the way back down again, just a little bit slightly, and then we might move up a bit afterwards. So looking at the three-wave structure here, I'll be surprised if this really continues up too much further today, and we don't see another bit of a pullback to the downside. Now, if I do take the measurement on this, and we take it from this low point to this high point just here, move this down to the recent bounce, which could push up a little bit higher, but it's definitely not really looking like strong. This could take us to about 22,933 approximately. That's just a common area of retracement on that structure. Now, it's possible that we continue to push up. We are not really in a major area of resistance with this right now. We're coming up against some of these local points just here, but really I think we want to be looking at that 24,600 to be a slightly better resistance line. But if this one does hold, this could be a new issue for us for Bitcoin, at least for the Bitcoin bulls out there coming in right here. As you can kind of see that we didn't really close this area, but we did wick below it. Again, similar kind of problems all around here and a little bit of resistance there. But, essentially it's a bit of a weak resistance line. I'm not looking overly strong on that one. But instead, I would be looking more towards some of these additional areas around here where we did run out of momentum. That being said, though, wherever it does land, it will change that slightly target. But, we are talking about still moving on down. Now, if I bring this up into our 4-hourly and we kind of scale it out a little bit, we can see, the things that are going on, big structural moves that are just corrective. But we have, of course, finished our 5-wave move of our 5th wave down here. So there is no additional structure to say that we have to go down into new lower lows. So I just want to be very clear about that. There's nothing here that tells us from an Elliott wave theory that we must go down into new lower lows. Instead, what we're going to do is we're going to wait for a new structure to appear and to see whether or not that structure tells us new lower lows are probable. Okay, so at this point, we're in a state of unknown. Basically, the last wave count that I have says 26.5K. No more than that. And then, of course, we'll have to see whether that comes in. If that does come in, where do we go next? We don't know. The structure will have to form. We'll have to analyze the structure and we'll have to take it from there. There's a couple of coins like this that are in this kind of state of flux where at the moment there is no structure to say that what's going to happen next. And whereas other coins have a much clearer kind of path over what is happening. Take Ethereum, for example, a little bit confusing with a 5-wave structure up and a 5-wave structure down, but at least there's structure there nonetheless. And we'll talk about that in a moment. But for Bitcoin here, we really don't have a structure after this 3-wave structure is complete, and therefore we kind of have to sit back, wait, and see what happens next. Obviously, it will be a downward move. We just don't know how much lower it's going to go. Is it going to be 18,000 or is it going to be 16,000? We just simply don't know at this stage. So it's important that we kind of understand that. But let's jump up into our daily. Actually, no, I'll tell you what. Let's jump up to a weekly and go talk about the obvious big concern that I have in the space, which of course is the $14,600 target. Now, the $600 or $14,600 target basically creates a bit of a problem for Bitcoin. Okay, and it's this one here. Okay, this is a 5-wave structure. This would be classed as a trend. The trend, however, is only valid if we pass the $14,600 level. Okay, so with that being said, this little move in the middle here, this one right here, this is actually a positive sign because this tells us that actually we're not really seeing this 5-wave trend structure, and we're pretty good because it's an odd place for that to be, and it would have to be a 4th wave move within our wave 3, which is possible. We could move down here and we could do that, but I wouldn't know where to place the wave 2 in that particular scenario. So this could be a positive to avoid us having a 5-wave structure drop. However, it's still possible that if we do hit this point on a macro, it would technically be an impulsive structure regardless of the subwave count of our wave 3. It just would be very, very annoying and frustrating. The other way of looking at it could be that we actually end up with another 3-wave drop on our macro scale. So for example, if we can avoid the trend, we could still move on down without having a trend structure. And what I mean by this is we could be looking at this slightly differently, right? So for example, let me just grab this. We go with a WXY here, for example, and then we could go for a W here, X here, and then Y here. Okay, we could end up with something like that. And again, we could end up with something even worse where we do have another 3-wave structure drop afterwards and all that. But again, these are problems because it could then turn it into more of a diagonal-based structure rather than a trend-based impulsive structure. Both are pretty bearish and considering they'll be going down. So we want to be kind of concerned about that. One of the key things, though, essentially what I'm looking for here is to try to stay above 14,600 if we can. Otherwise, potentially we are talking not only $10,000 Bitcoin, but you might even be talking less than that at some point, like 3,000 or so. And, essentially that would be pretty bearish, right? Let's go ahead and just jump on up into, let me find this one here on our weekly chart. This is the one that goes from Bitstamp. So basically Bitcoin paired up with the dollar USD weekly and Bitstamp, right? This is the one that shows us the most amount of information, all these kind of cycles. Now, the reason for this is if we were to really reflect on the structural moves of what's been going on, then we could quite easily see that there are some structures in here that are quite interesting. And depending on where we take it from, we could be looking at this as a potential 5-wave structure in itself. And if that is done and that is complete, then there's always the possibility that we do revisit some of those absolutely absolutely insanely low levels. Now, I know a lot of people would say, oh, it's like the dot-com era, right? It's a bubble. And these aren't necessarily the right terminologies to think of it. I think of it as structured approaches. If we completed a macro weekly chart 5-wave structure upwards, then a 50% retracement wouldn't exactly be unheard of. And, you know, that would be pretty bearish, right? If we were to think of it like that. So if I were to take, for example, this $69,000 high point and just take this initial kind of 2013 low point, then we could be looking at a potential bearish scenario where we move down into this range over here. Now, that would put us between $254 and $1,759. Seems absolutely insane, right? But again, if we were to think of that as a 5-wave structure, that would be something that we would be looking at on a weekly scale. We might say, oh, it's a dot-com crash or whatever, similar to that. But actually, it's a structured approach. It means you had the 5 waves up, right, which might just be the beginning of a much bigger run that you've never seen before, right? And basically, if I were to draw this out, you'd go 1, 2, 3, 4, 5, like so, right? And in that structure, you would then see a 3-wave structure drop to the downside. That could be a zigzag, for example, where we go, this all being kind of wave 1. We have some kind of bull run where we move up, but we don't go to new all-time highs, and then we fall back down and we finish off that structure. It's a 3-wave drop, and then all of a sudden, the next thing you know, you're going something kind of insane like this, right? So there's always structures to things. Things aren't just bubbles, and they aren't just random, in my opinion anyway. But, you know, that's a lot of speculative kind of thought process there. But when we have those kind of structures on these kind of larger timeframes, we should consider what that might mean slightly longer term. Okay. So that's kind of where Bitcoin sits right now. We could obviously talk about that moving average. Currently that sits at 23,058. I wonder if by the end of the week we close below that. It'll be interesting to kind of see. But for the most part, there isn't actually too much more to note about this one. We'll see. Interesting to see what happens next. Let me actually just going to throw one more indicator on this graph before I finish this. Let me just find the Gaussian channel here. So here for the Gaussian channel, we can kind of see that we've moving up a little bit here, but I'm still expecting this to come down a little bit further. But it'd be interesting to kind of see how it plays out and what happens next there. But for the most part, that's an interesting kind of tell. Still looking pretty good from a Gaussian channel point of view and optimized value. So dollar cost averaging around here makes sense regardless. But yeah, cool. Okay, let's move on. Let's go ahead now and take a look at what's been going on with Ethereum. Ethereum's been one that a lot of people have been really interested in. A lot of FOMO activity has been going on for Ethereum. And there's a few things that I do want to kind of talk about. We spoke about them briefly yesterday, but we'll talk about them again today. If I can find them right in here. So let's go ahead and bring this up, right? So yesterday we had that slight issue with our dolphin data. That's corrected now. So basically here we have our whales, our sharks, our dolphins, this time for Ethereum. So 10,000 or more Ethereum, 1,000 or more Ethereum, or 100 or more Ethereum. Okay, and we get the obvious problems, okay? And the obvious problem is that our whales have been heavily accumulating, and they've been doing this since the price of 1,600. So they didn't do this at the bottom. Instead, they did this at a later stage. Okay, basically propping up, in my opinion, the Ethereum price and creating a 5-wave structured move to the upside. Okay, however, we are in that position where we have both a macro 5-wave move down and a 5-wave move up on a micro scale. Now, why is that a problem? That's a problem because I think if these guys were to come out, we would completely lose that structure. I think that structure was a bit fake in the way that it's approached. And I think that this particular issue is going to be something that we're going to see basically retail investors get absolutely wrecked for. So these guys, let's face it, if we're being brutally honest, these whales, they don't care about Ethereum as a protocol. They don't care about the dApps that run on it. They only care about making decent percentage gains. And they've done that. They've got a lot of gains from these low points to where they are right now. Okay? And it won't take much for these guys to then want to lock in those gains, okay? So I'm being really cautious about this. This is unusual for the way that the price has been moving. And as the price has been moving in such a way, and the way that it feels very unnatural, this is kind of where I'm feeling that these guys are basically controlling this recent move to the upside. Now, we take a look at the sharks. They've just been following the price action. Again, that's pretty normal. You would expect that. And again, the dolphins here have been heavily accumulating, buying up every dip possible, as retail investors tend to do. And then basically the bottom came in. Everyone said the bottom was in. That's fantastic. They start to accumulate even more, riding the price up. So at the moment, a lot of money has flowed in. Okay, a lot of wallets have kind of got much bigger. However, we should definitely be concerned over what these things mean. So like that did with Bitcoin, I'm just going to expand this one up. I'm just going to have to first of all get rid of this. Let me just send that to the back. Did that work? Yeah, I'll have to sort that out in a second. So if I come back in here, and I'm just going to change this to the last 6 months, like I did with the Bitcoin whales, we can get a much bigger picture as to what is going on. Okay, so the wallets are in the light blue and the price is in the dark blue. Okay, so we see that they accumulated, and basically they kind of slowly declined out of this as the price came down. They were still selling into the pump at the beginning, and then they started to accumulate heavily. Okay, now they didn't buy at the bottom, okay, and they didn't buy before the bottom has come in, at least as far as we can see. So they are either now accumulating at this stage, as people are starting to sell into some pressure and the price continues to pull back down, they're going to buy it, or they are going to basically dump on the market here. This is an unusual spike. It's not following what you would expect to see. And again, what you would expect to see here is that they buy and then the price goes up. And then as the price is up there, they sell off. Whereas what we've seen so far is the price has moved up, then they bought, which is an unusual reaction to the space. So I'm not sure what they're planning. I don't know what they're planning to do. I don't know how they're going to do it, but this is not normal. This is not normal behavior from what we've seen in the history of how they would normally operate. And as a result of this, I think these guys are the ones that are propping up the price of Ethereum. And these are the ones that are probably going to dump on the market pretty sharply in the same way that we have seen previously and trigger the next kind of spur to the downside. So keeping a close eye on what these guys are doing. This does not give me confidence. If they were buying down at the bottom here and they were slowly grinding it up, I wouldn't have such a problem with it. But the fact that this is really out of the blue and out of nowhere, and basically knowing that the structures of Elliott wave theory within the data of Ethereum, this gives me a lot of room for concern. This could be a big sell the news event, if you know what I mean. Basically ahead of the merge, accumulate, wait for the price to pump up a bit, and then dump it hard. Okay, so these guys are not your friends. These guys are basically looking to take money from basically retail investors. It's a sum zero game where there's a buyer, there's a seller, and where there's a seller, there's going to be a buyer. So watch out for those guys. Doesn't give me a lot of confidence. But let's go ahead and jump into Elliott wave theory on the charts. Ethereum paired up with USDT. On the hourly chart, Binance is the data source. So as I was saying, we've got a 5-wave structured move to the upside. Okay, we have this big wave 1 over this side. I actually have it as an ABC at the moment. I'm going to remove that for a second there. Okay, so it's big 1, 2 down here, 3 coming up here. 3 is dissected down into 5 waves. We'll look for waving 4, then we're looking for a wave 5, okay? Now, the other thing we have to bear in mind, let me just do this over here for a second, and I've done this a couple times, so bear with me if you have seen it already. We have a 5-wave structure like this, okay? Why I find the unusual behavior of those wallets, I'll show you. Okay, so wave 1 is usually considered our fake pump. Okay, nobody really believes that this is a start of anything. We have the bottom down here, we have this little wave 1 up here, and then it reverses down. It comes quite deep and everyone's like, I told you so. But this is typically where our whales would buy. Okay, that's where whales would buy. They buy down here. They then go up and they sell at the top of wave 3. Okay, retail investors missed out on this entire wave 3 pump, which is 1.618 times wave 1. So retail money comes in here at our wave 4 low point, okay? And they basically go ahead and they sell at the top. Oh, no, that's a lie. A lot of smart retail money sells, or traders sell at the top of wave 5. But basically retail money is left holding the bags at the top here, okay? Whales are normally out of the market with wave 3. They are looking for this. That's all they really care about. Now, that could be dissected down into 5 waves. okay? And in which case, that's fine. They would be looking to kind of exit out. So knowing how this kind of structure and the psychology of this structure breaks down helps us understand whether or not what we've got going on with Ethereum makes sense, okay? Let me get rid of all of that. There we go. Okay, so we've got this 5-wave structure. We're at the top of wave 3. Then, of course, we've got our whale wallets doing this, which is incredibly unusual. Okay, so normally these guys are coming out of their positions at this point. Retail is then FOMOing in on the dip, and then basically when on top of wave 5, which is really small, you see collapse, okay? But instead, what we're seeing is more accumulation going on. So it's incredibly odd. Normally, they would be doing that down here, which they haven't done. They've been doing it at this wave 4 over this point instead. So caution, this is not a typical kind of move, okay? So we have the 5-wave structure upwards, okay? That's not complete yet. We've done basically a 3-3-5 so far. So with that being said, we are expecting some kind of 4th wave down and some kind of 5th wave up. Okay, of course, there would be invalidation of our macro move of 2,159, basically preventing this structure down here. However, if we do not, and we just break on down from this structure, i.e. those wallets dump on the market, then what we're actually looking at, I believe, will be a mass sell-off event actually confirming that we're going down much lower. The confirmation of a low will come in at $1,276, where we estimate our low point being 526 to 724. Okay, this is the point of we've got a macro position going down. If I shoot this up into our, bring this up here. Okay, 1, 2, 3, 4, 5. Okay, this is our daily or weekly time frame versus what is going on our hourly, which is this 5-wave structure to the upside. Both are valid until one is proven otherwise. So essentially 2,159 prevents the lows and 1,276 prevents the highs. Okay, so one of those two numbers, one of them gets hit, we are going to know what direction we're going to go in. Okay, we have a plan for both parts. It doesn't matter which way it goes ultimately. We have a plan. But I think the macro is going to win, and I think the macro is going to win because of the unusual activity with the whale wallets and understanding the structure of what this pattern actually means in the background doesn't make a lot of sense. So we're keeping a real close eye on that. And if we do push up higher than 2,159, I'm still expecting a collapse of around 50 to 88% anyway. So either way, there's price is going down. It's just a case of how low is it going to go. Okay, so when we take a look at the stochastic, we're overbought on this hourly chart after this recent pump, and I believe this recent pump is probably only pumping because the DXY has gone down a little bit. That appears to be what's going on there. So that's not overly too much of a concern. And on the 4-hourly, we've got some growth coming in here. We've got a little bit more to come though. On the 8-hour, not too bad. The daily still reasonably high. The weekly is overbought. So there's going to be a collapse here. And obviously the stochastic RSI can't really be used to help us understand 100% of the price direction on it. It's just more of an indication of momentum behind the price. So at the moment, there's a fair amount of momentum to the upside here. It's holding up on the 4-hour chart pretty well, on the 8-hour chart pretty well, but on the hourly, we're looking like we need to kind of come back down and have a bit of cooling off period. We'll take a look at the volume. We can just expand this volume up a little bit just down here. You can kind of see, I'm not sure if we can actually, make this a little bit bigger. Zoom on in here. So if we take a look at this volume, for example, we can see that on this macro scale, we have a decrease in volume. Now, of course, we can take a look at this recent push to the upside. We can see there's a little bit of an increase in volume there. So that's probably positive, and we'll see we're decreasing the volume on the way down and all that kind of stuff. So again, the volume is supporting the move at the moment. We'll have to keep a close eye on that, but do bear in mind that the volume is incredibly low as to where it was before, and these low volumes are not exactly good for the price of Ethereum. Let's just take a look at where some of these pockets of volumes were previously versus where they are right now. So we've got really low volume in comparison to where the history of Ethereum has been in the past. So you should keep a close eye on that as well, because the volume, the stochastic RSI are good indications as to whether or not we're going to start to see reversal. I do think that we're going to start to see a bit of a reversal here on the hourly chart today. And so we are looking for a bit of a pullback to the downside. Now we do have a 3-wave structured move here, but we could also take a look at this as just a 1-wave down. This could be our B wave, then we could move on down lower. And if that is the case, then I would estimate, if I grab hold of this and just pull this to here, I would estimate we're coming down to about 1,791 approximately, somewhere around there, to kind of complete that structure. But could be a little bit off here as we do have a clear three-wave structure already, and we could just look for a small move down and then another move to the upside. Okay, so that's why I'm going to leave that one today, guys. If you have found this video useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, then why not go ahead, check it out. Remember to like, subscribe, and guys, I will catch you all in the next one.